This is CuriosityStream Q3 2022. This is their financial result page. We have the 10Q open as well on this tab, but most of the information we're looking for is contained here. And then we also have the prepared remarks tab pulled up here from the CEO and the CFO, and we'll talk about some highlights from their statements from the conference call. The third quarter revenue was $23.6 million, which is up 26% year over year, and it's above the high end of their guidance range. And they reduced their net profitability. I mean, they're still negatively profitable, but they reduced it quarter over quarter, and not year over year because there were outstanding warrants that had increased in value and they benefited from. But if not for that, on that particular quarter, they were trending. If you look at the trend of their profitability, they were losing more money back then, and they are now starting to approach profitability more closely. So they are very focused on cutting spending. They reduced their combined advertising, marketing, and general administration expenses by 34%, or $7.4 million compared to the quarter over quarter. They had a net loss of $4.5 million. And here's what I was talking about, the net income of $0.8 million of the third quarter of 2021. Looking through the 10Q, we can see on that quarter that they do comparisons to that quarter. And this income of $800,000 was a result of increased value of warrants. They are ramping their iHeartMedia partnership. They have One Day University podcast available, and they have a industry-leading direct subscriber retention rate, which I'm going to hop over to the prepared remarks page to look at a statement made by the CEO that their subscriber retention remained the best in class with low single-digit monthly subscriber churn. And also 85% of their subscribers are on annual plans, and this reduces the churn, and also suggests that the customers would be more palatable to increases in pricing in the future, which is the argument they make here. And the CFO, he focuses very heavily on the different areas in which they cut expenses, particularly in the marketing. The revenue was up 18.7%. That was a highlight. They have cash, restricted cash, and investments available for sale of $64.3 million, and they have no debt as of September 30th. And their net loss for the quarter, $4.5 million, so they could cover several quarters of losses just in their cash and investment portfolio. For business highlights, here are the new releases of original programming. Here's their deal, their podcast deal once again. And they signed a new distribution agreement with the largest MVPD in the Netherlands. Here is a smartest bundle in streaming premium SVOD package, which has a library of over 25,000 titles across 6 streaming services. Pretty good. That's pretty much it for this quarter. And on their conference call, they went over these new programs here that are highlighted. And then the CFO focused very heavily on the different areas in which they were cutting spending. particularly advertising and administrative costs. Um, so while the revenue gain was pretty significant, cutting this $7.4 million of spending was more impactful on their net loss of $4.5 million. So they are trending in the right direction. We could even open up oops, there we go. Let's visualize it like this. We know the numbers here. EPS of -9 for this quarter, and revenue of 23 million for this quarter here. But we can see the trend was not looking too good this quarter. Significant cutback in spending, additional revenue, and 0.9. Where's the EPS? We're going to go down to the revenue tab. Let's see. The balance sheet. What am I looking for? Here we go. It is the revenue tab. So net income per share, -9 here. And here is the gain of 800,000 a year ago, as we were discussing, which is visualized here. This change in fair value of warrant liability is where the gain of 800,000 came from. But yeah, that's pretty much it for them for this quarter. Trending in the right direction. They didn't really give any guidance on the following quarters. I don't know when or if a larger amount of subscribers renew in a certain particular quarter. That's probably the case, but they don't mention anything like that, so it's hard to imagine what they look like from here. With as low as a subscriber churn as they're stating, I would imagine that they just continue to increase that revenue number. If the resubscription is heavy in other quarters, then it's potential that we have a quarter in which their lowest amount of subscribers renew, which could hurt revenue. But they do have other areas of revenue. They have advertising and marketing. Hold on. That's their operating expenses. They have a tab that breaks down. Let me find it real quick. They have a tab that breaks down their revenue. Where is it? Where is their revenue breakdown? Here we go. Here is, so total revenue 23,569,000. From subscribers is 8.8 million. Licensing fee 14 million, and other being 177,000. So their subscriptions, if they are weighted more heavily to one quarter or the other, we shouldn't see too drastic of a fluctuation in the revenue. So that's good, at least a little diversified revenue stream. All right, that'll do it for this one. Thanks for watching.